understanding the differences between a HELOC and a loan from an insurance policy is critical because it's going to impact your capacity to build wealth passively. Oh my goodness gracious. See, you see, y'all getting me stirred up just to me bringing this up. When we talk about creating wealth passively, utilizing life insurance with a HELOC, this is very powerful because it can create the same financial benefit as if you had a tenant who was paying you cash flow. As a matter of fact, a policy can be designed with a HELOC to mirror having cash flow, the same cash flow that you would get from a tenant without the hassle and the headaches. And let me not say hassle and headaches. Let me say without the responsibilities of a tenant. That's a fairer statement, a more fair statement to make. This is incredible, and this is very, very important. I just got off the phone with another client of mine who's in the process of buying another property. And we were talking about her HELOC and the role that her HELOC played in building her cash reserves. So we're not looking at the HELOC from a traditional perspective of just using it to pay down debt or save on interest or those kinds of things. We literally want to use the HELOC to create the scenario of increasing property equity value regardless of market conditions. Now, y'all better write that down. Not, come on now. Y'all better write that's now. I know I'm saying something right now. Let me say this again. To the purpose, what we want to use the HELOC for is to double the property equity of the value of the property. Did I say that right? To double the property equity value of the property regardless of market conditions. And again, we're still talking about without a tenant. So if you have tenants, we can supercharge your cash flows and your property equity when you blend these strategies together. Oh, goodness gracious. So let's go through this because I want to get into something here that's very, very important. So first of all, when we look at the HELOC, we understand now that it's a revolving credit line secured by the property. That's just the best, simple, easy way to just explain what a HELOC is, okay? Number two, it's a short-term debt. You can use it for consolidation. You can use your HELOC for whatever you want to use it for. There's no rules on it, like a 529 college savings plan or something like that, where it says, well, if you can only use it for this or that. No, you can use it for whatever you want to use it for. The advantage of a HELOC is that you're going to get lower interest rates than a credit card, right? It's a flexible use fund, as we've already mentioned, and you have the potential of a tax deduction. This is very important because remember, the beginning of the year, we're talking about how do we position ourselves to build a $100,000 cash reserve or increasing our cash reserves by $100,000 by simply restructuring our finances. This is very important because when we do this the right way, we can literally use a strategy to create more wealth, more cash reserves. Those cash reserves can be used for cash flow. And again, we're talking about building this without having to work. Okay, disadvantages of HELOC. Risk of foreclosure, yeah, because if you don't pay it, they can, so that's obvious. The interest rates are variable. Let me tell you this. Why is a variable interest rate irrelevant? Let me say it again. Why is a variable interest rate irrelevant when it comes to a HELOC with the strategy that we use? Why is the variable rate irrelevant? Because people are concerned about variable interest rates, and they should be. But everyone's not following the same strategy. So why is it that when you follow our strategy, having a variable interest rate is not a problem? I'm gonna let us marinate on that. I'm gonna come back. Then we have these are explained as disadvantages. So these are just facts. So, and then reduces home equity. So when you use your HELOC, you are reducing your home equity, but not in the strategy that we teach. You're literally going to increase your property equity value despite the fact that you are using your HELOC. So you're not going to reduce your property equity. See, Lord have mercy. Okay, it's best for immediate liquidity and short-term debt reduction. Very important point. Now we get to the insurance policy that we use in Next Universal Life. Life insurance policy with cash value tied to market indexes. I was going over some indexes with a client or a potential client, and I was showing him how my clients got, in one scenario, we showed a couple of different scenarios. One scenario, my clients got a 10% rate of return over the last 3 years, despite 2 years ago, we had a 17% market loss. Did you all know that? And my clients did not participate in that market loss. I said that in a client scenario, they averaged 10% rate of return from 2023, 2022, and 2021, despite the fact that in 2022, there was a negative 17% market loss in the S&P 500. Despite that, my clients still averaged 10% return in that year. How in the world can you get a 10% positive rate of return in a negative 17% environment? Because of strategies that we teach. What's rule number one, everybody? Secondly, the purpose of IUL is to provide long-term wealth building with life insurance coverage. Now, that's true, but that's not the only truth. It also provides short-term wealth building. But I had one client where we were talking about doubling their property value in 2 to 3 years, utilizing the policy along with some other strategies, blending them together. If I was able to help you double your property equity value in 2 to 3 years, would that be worth taking 15 minutes to talk with me? Here's the other advantages: tax deferred cash growth. So with my client, we were talking about, so he said, so I would have made $21,000 in that year. I said, yeah. And he would have made $21,000 tax-free. There's no file to claim. There's nothing to report to the government. Why? Because they don't look at that. That's a powerful thing. It has death and living benefits. So if something happens to you, you can have your funds earmarked to your family the way that you want it to be paid out. It has living benefits. You have heart attack, stroke, cancer, long-term care trigger. You have a set of funds earmarked there to help take care of you. Market downturn protection. We just talked about that. It says requires consistent funding. Now let's talk about this. That's true to a point. Let me just show y'all this because I was showing somebody this earlier today. So this person put 400 grand into the policy over a 4-year period. The way that I explained it is that they took 100 grand from their property equity every year and they put it into the policy. After 4 years, they got 375. Why did they have 375, Jeff? Because you have internal costs when you're putting money into the policy. You're going to see that reflected in your cash value. That's one of the things that rich people love about life insurance. They know that the internal cost, that their cash value is net cost. Wow, that's powerful. Okay, so we've talked about, okay, in this case, they took 250 out. They took 250 out, but our objective, what we want to do here is we want to double that money every 5 years. That is the power of bridging a HELOC with a policy and utilizing the policy the same way that you would use a credit card. But all of the profits go to you. So if we go back 5 years, this is what I'm telling you. If you look at all the debt that you've paid in the last 5 years, if you had been paying that money to you, the amount of debt that you paid out, that value, you would have all of that money back, plus you would have made a profit. And you could have structured that so that your money nearly doubled, because we went from 375 to 721, even though we only put 400,000 into the policy. Do you see the kind of return that is? That's crazy. Now, here is the power behind this. I can do this for somebody that's 65 years old. It's not your age. That's got nothing to do with this. We're trying to marry the HELOC and the life insurance policy. We're trying to marry them together. So if we decided to begin the process of thinking like the bank, okay, little bit by little bit, building my cash reserves and using my cash reserves to solve current financial problems. The purpose of life insurance, ladies and gentlemen, is to solve current and future financial problems. The purpose of life insurance is to protect your present and future assets and cash flow from losses. The purpose of life insurance is to create compounded exponential wealth where you never pay taxes. Now, I know you may not have heard life insurance explained in those terms, but that's how you use it. Can you imagine if you went back 5 years for all the debt that you've had? If you had all of that money back, plus you made a profit? The only difference between doing that and doing the way that you've been doing it is that you didn't do it through an insurance policy. Now, I know what you're saying. My insurance agent, don't talk to me like this. I know, because this is my 37th year in financial services. I wish I knew this when I started out. I wasn't taught this stuff. I learned it over time. What we want to do and what we are doing is utilizing the system of recycling and recapturing our money, marrying the HELOC and the policy for the purpose of building cash reserves. Now, when we talk about the MMA account, now we're using the MMA account to eliminate the debt. See, that's a whole nother story. All right. Hopefully I said something that made sense. You guys have a great evening. I'll see y'all later. Bye-bye.